everyone thought Ether had to go up because crypto was the future. That belief is exactly what gets investors hurt. Right now, the market is showing something more brutal. When a trade loses its story, price can fall faster than conviction. Ether sliding toward the $1,500 zone in 2026 is not just a crypto headline. It is a warning about what happens when expectations get ahead of reality. A few years ago, the loudest money in the room kept insisting that digital assets were the cleanest way to express the debasement trade. Gold, Bitcoin, anything scarce that was supposed to be the winning play when investors wanted protection from money losing value. But now that idea is fading. Outflows from gold and Bitcoin ETFs show investors are moving on, and MarketWatch call the debasement trade dead as both a discussion point and an investment concept. That matters because sentiment changes first, then price follows. Picture an investor who bought Ether because everyone around them sounded certain. The pitch was simple: smart contracts, network effects, the next internet, the whole package. It sounded unstoppable. But markets do not reward sounding unstoppable. They reward demand that keeps showing up when the story gets harder to sell. When a market starts drifting toward a level like $1,500, the number itself is not the whole story. The real signal is what it says about confidence. Look at the chip world. On Reddit, investors were talking about Micron as the AI memory trade nobody wanted to chase. A year ago, most people were focused on GPUs, hyperscalers, and software. Now memory is suddenly the bottleneck everyone cares about. High bandwidth memory demand is tight, pricing power is back, and the thesis looks stronger than it did when the stock was much cheaper. One investor even said they were in MU earlier, took profits, and completely underestimated how big it could get. That is the mirror image of Ether. First, separate price from conviction. If your thesis only works when the chart goes up, it is not a thesis. It is a hope. Second, ask what has changed. The debasement trade losing favor is a reminder that capital rotates fast. When ETF outflows show investors are moving on, crowded trades can unravel quietly before they collapse loudly. Third, size positions like you are wrong sometimes, because you will be. The investors who survive big shifts are not the ones who never make a mistake. They are the ones who avoid letting one conviction destroy their flexibility. The final twist is that falling Ether may be less about Ether alone, and more about the market's tolerance for expensive stories. When one narrative loses force, others get repriced too. So if you are watching Ether right now, do not ask only, can it bounce? Ask, what would make me still want to own it if nobody was talking about it? That is the question that separates speculation from investing. The takeaway is simple. When a trade stops being obvious, stop assuming it is still safe. Subscribe so you do not miss what is coming next. Drop a comment with your biggest takeaway. And remember, this is not financial advice. Always do your own research and consider your personal risk tolerance before investing.